The UK government has its autumn budget taking place on Wednesday the 30th of October, and it's already released statements saying that this will be a painful budget, with taxes likely to rise in certain areas. So what is the potential impact on your crypto in terms of tax? What might the outcomes of this be? And what might you be able to do to mitigate this potential risk? Because this is on a lot of people's minds at the moment, with a lot of worry about how it could affect your crypto gains. Well, I'm pleased to welcome back Jamie Nuttall, who's the head of crypto tax at Miner again in this video, to discuss this very thing. And if you're interested in getting specific crypto tax advice based on your personal circumstances from one of the best crypto accounting firms around, then I've included a link in the description of this video to contact Jamie at Miner directly. You just need to make sure you put my name and YouTube channel in the online inquiry form, just so they know where you've come from. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a reminder that nothing contained here is financial or tax advice, and let's jump straight in. Hi Jamie, lovely to see you again. Thank you so much for jumping on another video. Slightly different video this time. It's not directly kind of Q&A UK crypto tax based. It's obviously UK based. I think this is going to be a great conversation when we talk about the potential outcomes of the autumn budget in the UK and maybe the effects on crypto investors as well. It's obviously an unknown, and I just want to start off with that caveat that nobody knows. No one has an inside kind of idea in terms of what the HMRC are going to do or what the UK government's going to do. But I think it's really good for people to understand the different options that might come from it.
Yeah, thanks for the introduction there, James. Really appreciate being here as usual. Always good fun. I agree. I think this is going to be an absolute madhouse of a topic of conversation. It's very current at the moment. It's around the autumn budget that comes in October, end of October 30th, where there's a strong inclination and suggestion that certain tax rates will go up and certain things will change. That is going to affect us at least domestically and maybe even globally to a certain degree, depending on what goes on. The implications on those who hold crypto are high. Things will change, but we can go into that into a bit more detail momentarily. So yeah, it's going to be great.
Yeah, and the first place I'd like to start is if things just stayed the same and how likely we feel that is. Because at the moment, if we're working on, I don't know, let's say the idea of a £100,000 crypto gain, if we're taking out AEA and spouse allowances and all of that stuff and just going on a really broad example, then we're looking at 20%. So we're looking at £20,000 tax on a £100,000 gain. And really it's, do we think that it will stay the same based on what really the Chancellor has said, what all the statements that have come out in terms of the pain coming in the autumn budget and the tax increases that they've alluded to? I know from my point of view, I think it is quite unlikely to stay the same. What's your view?
Yeah, so I'm just going to reiterate what you said at the beginning of the video. These are all rumors. These are all my personal, yes, professional, but still my personal opinion on what could happen and speculation because nobody knows. In terms of the tax rates staying the same for capital gains, there is a chance. There is a very slim chance, but there is a chance. At the moment, we have a 10% bracket and a 20% bracket for basic and higher rate payers for capital gains. This will affect most people in the crypto space, and very few will be under the income tax regime for anything more than their miscellaneous income. So anyone who is in crypto and earning or seeing gains will be affected by this. Now, the reason why we believe that this is going to change from 10 and 20% is because with Keir Starmer, his interviews, and in fact, most of the Labour team that are publicly talking are talking about how corporation tax will not increase, how income tax will not increase. Yes, they might have gone back on that since, but at no point did they comment on capital gains or council tax or a few other bits and pieces. But we're focusing on capital gains tax here. Now, that would imply that there's going to be a change, and the change is likely to go up to a certain degree as well. I very much doubt we'll see any tax cuts at the moment. So yes, possible for it to stay the same at 10 and 20%, but highly unlikely.
Yeah, no, definitely. And I was speaking to Joe, doing a video on, I mean, people can keep an eye out for this as well, but we're doing a video on potentially adding crypto onto a company's balance sheet. And a big part of that conversation, which we've just alluded to really, is it's unknown. So it's almost hedging your risk.
Yeah.
And it's almost trying to make a decision to minimize your tax burden without knowing. So it's a really difficult balance.
Yeah, absolutely. And if we've got time at the end, I'll go through a couple of ideas of what you can and can't do to help the situation. Again, it's risky because it might not change, or it might go down. You never know. Unlikely, but still, you just never know. You've really got to hedge your bets.
Yeah, no, definitely. So maybe an idea is if they were to keep capital gains tax rates and amounts the same, 10%, 20%, and they kept that the same, what do you think? I mean, the potential of them reducing the AEA, so if they brought that in line with like miscellaneous income, the allowance for that, which would be a significant drop.
I think those two are mutually exclusive. They've already recently reduced it from 12,300 to 6,000, and now this year it's in £3,000. I highly doubt they're going to reduce it again anytime soon, but it wouldn't be out of the question. And if they did, I don't think that would have any implications on the tax rates itself. So the two would probably act, like I said, mutually exclusive to each other and not really be dependent on the other going up or down or left or right. So yeah, possible. Don't think it's going to be affected by the tax rates itself.
I'm wondering how much money that would raise in terms of because they've already gone, as you said, from 12,000 down to 3,000. If you go down from 3,000 down to 500 or something.
I think there's the bigger issue is for those who are affected by the tax rates, they might want to leave the country, to be honest. And I think that's going to really shoot themselves in the foot. So yeah, the allowance going down any further is almost insignificant at the current rate. You're looking at a maximum of £600 savings, even if it goes down to zero, in terms of the Treasury getting that money in. So it's not crazy considering the amount of people that are under the capital gains regime. So I think the tax rate going up could increase that threshold to maybe £1,200 worth more per person than 600 just by going up in percentages and increasing the tax rate for capital gains tax. It's a tough one. I don't see it falling, the annual exemption allowance falling anytime soon again. But again, wouldn't surprise me. I don't think it's as much of a bigger issue as the tax rates going up itself.
Yeah, and obviously a lot of people are talking about it being a wealth tax. So obviously the AEA reducing, if you're making 100,000, 200,000, whatever gains, a 3,000 to 500 reduction in AEA is not really much of a difference in the grand scheme of things. But for a small investor, that's a bigger percentage of your gains. So I think that's in line. And so maybe a potential would be for capital gains tax. So we've got 10%, 20%. They might change that to become in line with income tax. What are your thoughts on that?
Yeah, so one of the potential changes to the capital gains tax regime, is to match the income tax regime in terms of brackets. So currently, capital gains tax is 10 and 20%, income tax is 20, 40, and then another layer, 45. So that is a potential situation and scenario. I don't think it's the most likely, but it could happen. And this would move everyone effectively into a double amount of tax compared to what they were paying before. Plus, they lose the annual exemption as well that would have had a couple of years ago. They really start to suffer. So you've got both the higher earners and those with much more capital assets, higher valued capital assets, and they will also get those at entry level who would rely on the annual exemption allowance as well. So you've got it from both ends in this scenario. So yeah, potential, not the most likely though.
Yeah, that's interesting looking at that the lower level, and that's why it's less likely. Because if we take the example that I gave earlier on that £100,000 gain, again very broad and general without anything coming off that, but at 20% capital gains tax that's current, that's £20,000. And what you're alluding to is if it becomes in line with income tax, that then becomes 40%. So you're not paying tax, which is £20,000 on the £100,000 gain. You're now paying 40,000 of the 100,000. You've only got 60,000 left of your 100.
Yeah, that's
thousands
exactly
of.
it. And that's a like for like. The reality of it is if you're earning, let's say that this particular person has 150 grand's worth of income, so that all the capital gains would be above 150,000. In this scenario, the tax would actually be 45 grand because we've got an additional rate on top of it as well. So it's getting silly at that point, really. So it is a potential. I don't see them not thinking about this, but I also don't think that this is the route that would go down. There's a couple of more options that they could go down.
Fingers crossed.
Well, yeah, fingers crossed they don't change anything, but I can't see that happening.
Yeah, it's unfortunate. What about? I know this is something we've discussed just between us when we're having a conversation, but what about them keeping the capital gains tax the same, so 10%, 20%, but maybe introducing a higher additional rate capital gains tax? So maybe going 10%, 20%, 30%.
Yeah. The second option, which is more likely than the first, is keeping the tax rates the same for capital gains tax and just adding another layer on top. So that would be in line with the additional rate band for income tax at 45%. That layer could be 30%, could be 40%, could be 50%. But so we have that 10% basic rate band still, 20% for everyone up to say 150 grand's worth of total income and gains for the year. Anything above that, maybe a 35% seems to be about right in this scenario. It's better all around, as you can tell, just mathematically. It seems a little bit more fair. It kind of starts to create this synergy with the income tax regime itself by having three bands. So definitely a potential. Still, I don't think it's the most likely, but in my professional and personal opinion, I think it's the second most likely scenario. But anything can change at any time. They might decide that today, and then on the 19th of October, go, you know what? I know we've only got a few days left, but we're going to change it because of, and we're going to do something completely different. So who knows? But yeah, that's the second option, definitely.
And then it would depend at what level that comes in. 30%, 35%, 40%, 50%. I hope not 50%, but where are they going to put that then? Because with capital gains tax, correct me if I'm wrong, but they include your income as part of you add your income on into the gain to
Yeah.
get your total taxable amount.
Yeah, so the way that the tax system works in the UK is you would have a banding system and you kind of put your income and your gains on top of each other. So if you earned £30,000 employed, let's say, that would be the first layer. And if you had £30,000 capital gains, that would be the top. So the first 20 would be in the basic rate band, 10% in this scenario, and then the rest would be at 20%. So yeah, it does layer, if you like, and that's how it's calculated. So although there's no crossover per se, they help each other when assessing and determining the level of band you're in for that particular regime.
But there's quite a big gap, isn't there? The income tax banding in terms of, I think high rate's about 50,000, is it? But
Yes,
then the additional rate's 125,000 or something like that.
50.
Oh, okay, 150,000.
50,000, 125,000 threshold you're talking about is where you start to lose your personal allowance between 100 and 125,000. So your effective rate of tax between that bracket for income tax is 60%. Because you're paying your 20% that you lost from your personal allowance, that would have been 0%, and you're paying 40%. So you actually get taxed more for that 25 grand between there than you would over it. It's crazy to think, but yeah, that's exactly how it works.
Just if there is an additional rate capital gains tax, are they going to put that at 150? That's the question. So
I would imagine if they did that, it would make sense to match income tax. It would be a bit too complicated or unnecessarily complicated for it to be a different banding, considering the capital gains rate tax bandings are in line with income tax. And then you've got a weird calculation differential when you're trying to calculate this. So yeah, I can't imagine they wouldn't. But yeah.
yeah, definitely. How about and again, this is something that we've discussed and you've, I think, added on X in some posts, but capital gains tax, rather than becoming in line with the income tax rates, it becomes in line with the dividends tax rates.
So not only is this my favorite theory, I also think it's the most likely, and I'll explain why in a minute. So yeah, plug to myself, Crypto Tax JME on Twitter, sorry, X. Please do have a follow. I'm, It's not always about tax, but it normally is. And my DMs are always open, especially for your listeners and viewers. So the third option, and what I think is the most likely option, is where they match the tax rates for capital gains to dividends tax. Number one, you've got the 3-layer sort of brackets. Number two, you can argue and say that the first bracket is lower, so you've lowered taxes. And number three, you've not quite hit 40%. I'll go through the percentages in a minute. So it kind of ticks all the boxes. Number four, if you were to try and incorporate your crypto assets to avoid taxes, which by the way is legal, you can avoid taxes, it's illegal to evade. But if you were to have some tax plans to incorporate certain situations when taxes go up to sidestep taxes, this would make it not worthwhile to do, basically. So I think it's the smartest play they can do. Not saying I condone it or don't condone it, I just think it's a smart thing to do. So what are the rates? So you've got your basic rate, 8.75%. So it goes from 10% to 8.75. But when you hit the higher rate, it goes to 33.75%. So from 20% to 33.75%. Now, most people look at that and go, you know what? That's not too bad. That's not too bad. It's not great. I'd like it to be zero, but it's not too bad. The problem is you've got this additional rate on top of all that, where currently there's no additional rate, it's capped at 20. This additional rate will be at 39.35%. Let's call it 40%. So I think that's the most likely scenario. It also allows for Labour to have this narrative of, oh, we're taxing the rich a lot more, but not the working class. Not being funny, there's this fiscal drag, I guess, where we have a complete disorientated perception on what bands the working class are at nowadays. There's a lot of people I know that are paying 40% tax. Okay, they're just more than they have been because the brackets have not increased, but wages kind of have. Inflation definitely has increased. So even if you earn the average wage in the UK, which I think is about £33,000, you still only have £17,000, roughly speaking, of your basic rate band to make use of this new 8.75 lower tax rate. Anything above that, you're paying 33.75. So how much can you make through capital gains, crypto specifically for this particular segment? How much should you have to make until it's just you're worse off? I think that threshold is going to be very low. I should have done the calculations before this talk, if I'm honest, but I didn't. So I think it plays to the narrative. It just kind of fits right with everything that's going on right now, unfortunately. And I think that's where they're going to go. So there's three options: introduce a new tax rate band, align capital gains tax to the income tax regime in terms of the banding and the amounts, or what I believe is most likely, match it to the dividends rates itself specifically. But yeah, still not great, but most likely, I think.
But still, it's lower than the income tax version. So at 33.75% and then 39.35%, did you say? The additional rate, that's still lower than 40%, 45%.
Yes.
But your argument is that paying 33.75% is affecting middle.
It's going to affect a lot more people than they anticipate. Capital gains tends to be for the wealthier, if that's what the perception is. The thing is, there's lots of people now. I mean, how many views have you got? How many subscribers do you have? How many clients do you have? Loads of people into crypto right now, and some are making significant gains. And these are mostly ordinary people. They're not your Goldman Sachs. They're not your, famous, rich and wealthy, not necessarily anyway. So I don't think the narrative will be quite right, but I can see how this could be a narrative. But yeah, it'll be interesting to see what happens on the 30th. And this is exactly why I think this video will do well. I'll put that on record because I don't think anyone is talking about this overtly, understandably, because this is all rumors, guesswork. I could be completely wrong. Come 30th of October, it might be scrapped for all I know. But it's good to talk about it in advance because there might be some things you can do to help the situation.
Yeah, and I think I agree that this wouldn't be the right play because 33.7% or 33.75% at that level is quite high. Going from 20 to 30 is still a significant increase. There's a big difference between a 50,000, 75,000 gain and there is a 500,000 gain. So it's looking at those different levels. I just wanted to explain what you mentioned at the beginning, just in case anyone didn't understand it, where you were talking about incorporating.
Yes.
So incorporating would be setting up a limited company and then potentially adding the crypto into the company and taking advantage of the tax rates in terms of the lower tax rates rather than as an individual.
Yeah.
But obviously, if they put the tax on your crypto gains in line, so individual company, it's the same. Jamie's saying that there's no then advantage to adding crypto onto a company balance sheet, which some people
Kind
do.
of. Yeah, kind of. So if you were to suffer corporation tax, it would be between 19% and 25%. So at the moment, capital gains tax is way more advantageous. Fine. And that's just from a straight up comparison. Now, if they were to increase it to, say, roughly 40% higher rate tax, you go, even at 25%, that's better than 40. And you would be correct. The problem is, if you were to spend it personally, you'd have to draw out the company and pay dividends tax, if not PAYE or something along those lines. So yes, there will be situations where that is going to be handy and a good move, but it's very individual. For a lot of people, they'll go, okay, if I incorporate it, I'll pay, say, 19% tax, but when I withdraw it, I've got to pay up to 33.75%, maybe more. Well, I might as well keep it on myself and just pay 33.75%, you know? So that's why I think that this is a most likely situation, or one of the reasons, because it negates that, oh, let's all incorporate kind of mentality. And again, put your assets into a limited company, whether it's offshore or in the UK.
Yeah, and it is much more complex, obviously, as you just alluded to. It's not just the case of doing that. You might have a disposal when you're paying your crypto gains on the disposal, then you're paying the dividends tax. So it really is specific to each
James,
person.
you have been listening, because that would count as a disposal in a lot of cases. We do have incorporation relief, but for these purposes and these scenarios that we're talking about, chances are that will not be available. But yeah, glad you're listening and learning, James. It's nice to see.
Oh, thank you. Without you, I couldn't. But I would just say, though, because a lot of people are a little bit lost in the midst of everything, and people are expecting large crypto gains and then are not really sure what to do. And obviously, this is a video we're kind of hypothesizing in terms of what might happen. I would just say, if anybody wants to talk to someone and talk through it and potentially use the services or just ask for advice, then do contact Joe and Jamie at Minor and Nefos, because I've been on calls with people that have had these exact conversations, and they can be specific to you rather than a generic video where we're talking about potential, really, rather than exact circumstances.
Absolutely. And I am, at the date of recording this video, still happy to offer anyone who mentions your name in their meeting a completely free 1 hour consultation. Absolutely, still on, as far as I'm aware.
Oh, that's lovely. Thanks, Jamie. Thank you.
No problem.
In terms of timing, then, so we've got the autumn budget, end of October. When might it come in? Because again, we've talked about, and the conversation I'm going to be having with Joe as well, in terms of trying to hedge against your risk, and do I incorporate or do I add crypto onto a balance sheet? Probably you can't wait till the end of October and then do it retrospectively, or do it after. Do you want to talk a bit about that?
So usually, sometimes when we've got a budget, it tends to follow after the year end. Now, I strongly suspect that in the likely case that capital gains tax goes up, if you had this time between October and April to make use of this 20% tax rate, knowing it's going to double or whatever, most people, and I'm sure people watching with screaming at the screen right now going, sell, just dispose of it, create those gains. And you're absolutely correct. Now, if you take the crypto markets alone, the UK will have a global impact if this were to happen on the crypto markets. But capital gains tax isn't just for crypto. We're talking stocks and shares as well, property. So there's a likelihood that the FTSE would crash in this situation, at the very least, which in itself would affect the crypto markets, which in itself would affect the stocks market, which you see how this just goes back and forth until we dwindle into an absolute rubble. Now, don't get me wrong, I don't think it's the end of the world. I just think it'll be a temporary thing, but it will all crash and cause absolute chaos globally. So that kind of means they have to do it with immediate effect. There's no way around it. They cannot not do that. Can they do this? Yes. They've done it before with immediate effect. I think the latest one, or one of the latest one, were when they changed the law around furnished holiday lets. You're welcome to look that up. And with the changes, they included something called an anti-forestalling measure. Again, apologies if I pronounced that incorrectly. I read these things. And what that means is it's effectively immediately appropriate within the law, even though it's not law at that point. Now, long story short, with all these reasonings, I would say it would be effective from the next day in the exact moment it's announced to stop all of these issues.
Yeah, definitely. And I recently did a video on really the state or the position or the health of the UK economy. It included loads of metrics and loads of facts and loads of figures within that. As part of that was a recent report from 2024 about the number of millionaires which are expected to leave the UK. And that is significantly, well, as a proportion, it's significantly higher than really any of the large economies in the world. So even with that, as you're saying, if they said, well, you've got from October till April to leave the UK.
So this is the other thing. How do you fix this if you're an individual in this situation? Well, if you had the time, you've got loads of time to leave the UK, fine. Well, even if the tax rates go up, in certain situations, you can leave the UK, dispose of certain assets. Crypto is one of them. And as long as you don't fall back into the UK tax system within 5 years and loads of other caveats, this is a very complicated scenario. As long as you follow all that, you won't have to pay taxes in the UK. So we go, right, so they won't give us time because they can't. The only other option is to leave the UK. So that would take out God knows how much out of our economy in terms of taxes. So with all this, I also strongly believe they're going to introduce something like an exit tax. So they can no longer leave the country and do what these richer folk are doing, if you like, by leaving the jurisdiction, setting up elsewhere, not paying the taxes on their assets that are now with them in a different jurisdiction or a low tax jurisdiction, shall we say. So an exit tax could be on the cards as well. Now, I'm not as confident with this as the tax rate conversation in terms of what could happen. But again, they have to shut that down or do something about it. Otherwise, rather than people crashing the markets, they'll just leave the country and then you don't get any taxes at all. So what's the point in hiking the tax rates up? So I think that's going to be hand in hand. But you're absolutely right. I believe his name is Charlie, the richest plumber in the UK, has already put up his £12 million penthouse suite in the Thames, somewhere near the Thames, I believe. And he's looking to emigrate somewhere. I think Dubai is on the cards. No surprise there, because he's just had enough of what he expects will be an increase in inheritance tax as well, which we haven't even covered today. So I think a mass exodus could happen. They've got to stop that. A mass market crash could happen. They definitely will stop that. And yeah, it's kind of, they've really got claws into us as retail investors, I guess, and general investors into not even the crypto market, but stocks and shares.
Oh, definitely. That was a beautiful segue into the exit tax. I loved it. That's exactly what I was going to say, that even after this is put into place, it doesn't stop anybody leaving. If they do it on day one, someone could still leave on day two. But exactly as you said, by implementing a potential exit tax, you're paying.
So I'm going to guess your next question is going to be, what are your options, Jamie?
You've been learning. You've been listening, Jamie.
I know we should swap for one video. I do your job and you do mine, just to see how it goes.
Yeah, maybe. Maybe.
A few things really. So we talked about incorporating. That is a potential, but you have to do that before the rules change. Now, it's a bit of a risk, because if you do that before the rules change and the rules don't change or are more favorable, you've got to try and reverse it all. For anyone listening and watching, we have a few ideas on how to make that type of thing work. I'm happy to talk to current clients about it. So if you are a client or you're going to be a client, bring it up, but bring it up quick. And I mean, like, possibly as soon as this video is up, kind of quick, because we won't have much time. You could also start making use of your losses in a strategic way. So for example, if you've got losses this year that you haven't crystallized, maybe wait and crystallize them after the changes, because if you crystallize them now and you use them, you're looking at maximum 20% tax savings. Whereas if you crystallize them even a day after, or you look at it a day after, depending on what happens, you could crystallize double the amount of savings for the same amount that you're crystallizing effectively. So delaying that process and timing it, negligible value claims, hold on to them if you can. try and save as much money going forward. So that's one other way of looking at it. We already talked about the actual incorporation itself, which could work, but has to be beforehand, a bit risky. We talked about consider moving abroad. Now, that's not a lot of time, and it will be even less time when this video goes out live for people to go, oh, I'm going to move abroad. But there is a chance that there's no exit tax, so you might still be able to, but this would, again, be another option. And then finally, a really straightforward one is think about your interspousal transfers. So although you cannot use, James, say you and I in a civil partnership, for example, and you've got all these crypto assets and I've got nothing because I just didn't invest, whatever. You're using your £3,000 annual exemption. I'm not using mine. You can actually transfer me assets tax-free for me to then dispose of and make use of my 3,000. So it's a very small saving, but still a saving nonetheless. So those few things can help with the situation. Outside of that, we're completely speculating at that point. So there's not much point in talking about anything else from that front. But again, please remember, guys, those that are listening and watching, none of this is guarantee. It's all speculation. And I'm just trying to put you in the best position to make your own decision on what you want to do with as much knowledge and ideas of what could happen and how to save some taxes.
Yeah, definitely. And I think everyone's in a different set of circumstances themselves. So we're talking about like a broad brushstroke of just move abroad. Some people are not in that circumstance that they can or want to actually move abroad. So it's trying to cover all bases in a very general way. But again, get in contact with whether you've got your own accountant or Jamie at Minor, Joe as well. Get in contact, get some advice. I would echo what Jamie said in terms of we're recording this, the 20th of September. We've got a month really looking at it. So yeah. The last thing, Jamie, would be, we discussed this in our previous video, but the new bill that's been introduced into Parliament, which is essentially seeing crypto as personal property now. Do you see that as being almost a lead into these changes, or do you see that as being a positive? Any thoughts on that?
I genuinely see them as both. I'm bullish on the fact that we have legislation with the word crypto in it, you know. It's a good step forward. It means they're thinking about it. Maybe it'll lead on to further things. It also means that you could have more personal protection. So if someone were to steal your crypto assets, the police force and action fraud and whoever's involved will take you much more seriously because it's now legally your personal asset, which is great. Does it change much? Not right now. Not right now. And what you're alluding to about it maybe causing some form of basis to a future legislative change, tax change, potentially, which won't be great for the consumer and the retailer, but it's still a step towards progress and positivity. The changes with the crypto assets now being considered personal property and the protection involved might also lead to other wonderful things. Like, for example, if you lost your crypto assets, it's much harder to claim a negligible value, make a negligible value claim. Does that mean now you can? Is it more likely? How does that mechanism work? Does the whole Celsius and FTX thing now change all of a sudden how we deal with that? Celsius, fairly straightforward to deal with that nowadays. I say straightforward, it's straightforward for myself and people who know this industry. FTX a little bit more difficult. That might change. Little things like ISAs. With shares, you can have shares in your ISAs and you can get tax-free amounts and everything in there is all tax-free outside the scope. Fantastic. You don't have that for crypto at the moment, which is a bit unfair. So maybe this is the step towards, okay, let's introduce that. Pensions, you can have shares in pension schemes. You can't really have crypto so overtly, I guess, right now. There are a few places that offer it, and I'm sure they're doing a great job in all that. It's not common at the moment. So maybe it becomes more common and more acceptable and more pushed for, I guess. So there's lots of good potential from this, but I don't know what's going to happen and how they're going to use it. It's very similar to when they had the CBDCs brought out or the talk about it and the Bitcoin. It's like the potential for positivity is great because they could airdrop stimulus or stimuli packages during another pandemic, for example, any global disaster. It's very quick and acts fast and is dealt with. But at the same time, you lose the privacy of your bank accounts, if you like, to a certain degree. So, and yes, in this scenario, nothing really happened of it. And I still don't know what's going on with that. So that could be the same case here. But overall, yeah, positive about it. I don't want anyone to expect anything huge anytime soon from that legislative change.
Yeah, no, it's perfect. You open up a bit of a can of worms there at the end with the CBDC. I'm not going to get into that now. So that's brilliant. Honestly, thank you so much, Jamie. It's a pleasure to have you on. A thank you on behalf of me and everybody watching. You shared so much knowledge in all of the videos. And this one is more of a personal opinion type video rather than a factual video. But again, thank you.
No, my pleasure. It's always great fun to be on your channel, support you, and yeah, have a chat. So really pleased.
So that ends this video looking at what the autumn budget might mean for crypto holders and investors. And hopefully that's helped. It certainly is a bit of a minefield, quite stressful and certainly complex, knowing exactly what to do to minimize your tax burden and hedge against potential risk. So having someone there who's qualified, experienced and knowledgeable in the field can save you a lot of time and money. And I'd like to thank Jamie for giving up his time and sharing his expertise here. And if you are interested in getting specific crypto tax advice with Miner or Nephos, then you can contact them directly using the link in the description to this video, which will take you to an online inquiry form. And you just need to add my name and YouTube channel in the box there, just so they know where you've come from. If you have any questions relating to crypto tax, please do add them in the comments to this video, and we'll do our best to answer them in a future video. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.